Everyone knows someone who has never stopped working. Decades of effort, few days of rest, always chasing bills, always waiting for the next payment. And yet, at the end of the month, the money disappears. Nothing is left, nothing grows, nothing brings security. This doesn't happen due to lack of effort. It happens because of something much more silent. The real cause of poverty is not earning little. It's thinking like someone who will never escape the struggle. It's making financial decisions on autopilot, repeating patterns learned early on, without ever questioning whether they actually work. Many people were taught to do only one thing with money: spend it. When it comes in, the first reaction is to use it. Pay bills, buy something to relieve stress, reward the month's exhaustion. It seems harmless, it seems normal. But over time, this habit creates an invisible trap. Money becomes just a quick visitor. It arrives, solves urgencies and leaves, creating the feeling that it's never enough. And the more the person works, the more tired they become. Not because the work is heavy, but because there is no progress. Robert Kiyosaki teaches that poverty is not absence of income, it's absence of strategy. It's living without a plan, without control, and without financial awareness. It's repeating small decisions that, added up over the years, build an entire life of worry. While some learn to use money as a tool, others spend their lives being used by it. And that's exactly where poverty begins. Not in the lack of opportunities, but in the lack of understanding. There is a very common idea that keeps millions of people in the same place. The belief that poverty is destiny, that some people were born to have money and others weren't, that everything depends on luck, the government, the economy, or opportunities that never come. But this belief is one of the biggest financial traps that exist. If poverty were destiny, everyone who earns little would be broke. And that's not true. There are people with simple salaries who manage to build stability, save money, and even invest. At the same time, there are people with high incomes, important positions, and good businesses who live in debt, pressured by installments, and full of fear about the future. This shows something very clear. The problem is not in how much you earn, but in what you do with what you earn. Bad luck also doesn't explain everything, because bad luck happens once. Continuous poverty, on the other hand, is the result of repeated decisions: buying without planning, postponing financial control, using credit as an extension of salary, avoiding learning about money because you think this isn't for me. These choices seem small, but they accumulate like a silent snowball. Robert Kiyosaki always reinforces that money follows rules, and those who don't know these rules play the game of financial life always at a disadvantage. It's not punishment, it's not divine injustice, it's simply lack of preparation. When someone understands this, something changes inside. The person stops seeing themselves as a victim and starts taking control. They realize they don't need to wait to earn more to start better. They just need to act differently with what they already have. Poverty is not a permanent label. It is a state that can be changed when the mindset changes. And this understanding is liberating, because it puts the power of transformation back in the hands of who really matters, the person themselves. This is the most common mistake, and also the most dangerous. It seems normal, acceptable, even inevitable. The salary hits the account, and almost without noticing, it already has a set destination: bills, expenses, installments, commitments. At the end of the month, the balance returns to almost zero. Then the cycle restarts. Work, receive, spend. Work, receive, spend. Living in this mode is like running on a treadmill. You exert yourself, your energy is depleted, but you don't move forward. And the most deceptive part is that many people believe this is simply adult life. But in reality, this is lack of financial strategy. When a person spends everything they earn, they are not just without money, they are without margin of choice. Any unforeseen event becomes a big problem. Any delay generates anxiety. The future comes to be seen with fear because there is no reserve, there is no protection. Robert Kiyosaki teaches that it's not the amount you save that transforms your life, but the habit of saving. Even small amounts create something powerful: awareness. When someone sets aside a portion of money before spending, they are telling themselves that the future matters. Those who live in, salary out, work to survive. Those who learn to pay themselves first begin gradually to work to build freedom. It's a simple step, but it requires discipline, and that's exactly why few do it. This mistake keeps people trapped for decades, not because they earn little, but because they never break the cycle. And as long as the cycle isn't broken, effort alone will never be enough. Credit was created to make life easier, but for many people, it has become a silent trap. At first, everything seems simple: small installments, payment only next month, the feeling that it fits in the budget. The problem is that credit gives the illusion of power, when in reality it's taking away freedom. Using credit for things that don't generate returns is like borrowing money from your own future. A new phone, a car above what you can afford, luxury objects that impress for a short time. All of this loses value quickly, but the installments continue firm, month after month. Robert Kiyosaki always warns, financially poor people use credit to consume, while financially intelligent people use credit to build. When someone goes into debt for something that doesn't put money back in their pocket, they are trading momentary comfort for long-term worry. Over time, installments accumulate, one here, another there, and when the person realizes it, a good part of the salary is no longer theirs. It belongs to banks, finance companies, interest. Money enters the account only to leave immediately, without generating progress. The most dangerous part of this mistake is that it becomes a habit. Whenever a desire arises, credit seems like the quick solution, but each installment reduces the capacity for choice in the future. The person starts working not to grow, but to pay for past decisions. Credit is not the villain, the wrong use of it is. When used without strategy, it keeps the person trapped in a cycle of dependence where money never works in their favor. It only covers expenses that leave no legacy. This mistake is silent, but costs more than any debt. The lack of financial education causes intelligent, hard-working, and dedicated people to lose money without realizing it. Not because they are incapable, but because they were never taught to deal with it. In school, we learn to add, subtract, memorize formulas. But no one teaches how a budget works, what interest is, why money loses value over time, or how to protect what you earn. So the person grows up thinking that money is just something that goes in and out of the account. Robert Kiyosaki states that those who don't understand how money works end up working their entire lives for those who do understand. Financial ignorance doesn't seem like an immediate problem, but it charges a high price over the years. Bad choices, lost opportunities, and wasted effort. Without financial education, The person confuses assets with expenses, believes that everything that gives status is wealth, and doesn't realize they are increasing costs instead of building security. They accept high interest as something normal, pay fees without questioning, and always live reacting, never planning. The saddest part is that many think that investing or learning about finances is too complicated, but actually, what's complicated is living without understanding your own money. Those who learn the basics begin to see opportunities where before they only saw risks. Financial education doesn't serve to get rich overnight. It serves to avoid mistakes that slowly impoverish. And when someone starts learning, even gradually, they stop being hostage to the system and start taking control of their own financial life. This mistake is silent, but costs more than any debt. The lack of financial education causes intelligent, hard-working, and dedicated people to lose money without realizing it. Not because they are incapable, but because they were never taught to deal with it. In school, we learn to add, subtract, memorize formulas. But no one teaches how a budget works, what interest is, why money loses value over time, or how to protect what you earn. So the person grows up thinking that money is just something that goes in and out of the account. Robert Kiyosaki states that those who don't understand how money works end up working their entire lives for those who do understand. Financial ignorance doesn't seem like an immediate problem, but it charges a high price over the years. Bad choices, lost opportunities, and wasted effort. Without financial education, the person confuses assets with expenses, believes that everything that gives status is wealth, and doesn't realize they are increasing costs instead of building security. They accept high interest as something normal, pay fees without questioning, and always live reacting, never planning. The saddest part is that many think that investing or learning about finances is too complicated, but actually, what's complicated is living without understanding your own money. Those who learn the basics begin to see opportunities where before they only saw risks. Financial education doesn't serve to get rich overnight. It serves to avoid mistakes that slowly impoverish. And when someone starts learning, even gradually, they stop being hostage to the system and start taking control of their own financial life. Few people realize it, but money is also influenced by environment. The people we spend time with gradually shape the way we think, speak, and make decisions. This directly includes the way we deal with money. When someone is always surrounded by people who spend everything they earn, who live in debt, and who treat the future carelessly, this behavior starts to seem normal. Spending without planning becomes custom. Making jokes about debts becomes routine. Thinking about tomorrow seems excessive. Robert Kiyosaki teaches that financial habits are contagious. Constant conversations about consumption, installments, and financial problems end up pulling everyone to the same level, not out of malice, but through daily influence. This doesn't mean abandoning friends or thinking you're better than anyone. It means understanding that if you want to grow financially, you need to hear new ideas, spend time with people who think long-term, and learn from those who have already gone through the same challenges. Those who walk with people who don't talk about economics, investments, or planning will hardly be stimulated to change. Those who approach people who seek to improve, even with little, begin to see paths previously invisible. The right environment doesn't work miracles, but it prevents setbacks. It strengthens difficult decisions and helps maintain discipline when the urge to spend speaks louder. And in the long run, this makes a huge difference. When we look at these 4 mistakes together, it becomes easier to understand why so many people try so hard and advance so little. It's not an isolated problem, it's a pattern that repeats throughout life. Spending everything you earn prevents any progress. Living on credit creates dependence and anxiety. Not studying finances keeps the person in the dark, making decisions without understanding the consequences. And living with people who normalize these behaviors reinforces all of this daily. These traps don't appear all at once. They settle in gradually, disguised as normality. Each one feeds the other. Those who don't save resort to credit. Those who don't study accept high interest. Those who live surrounded by bad habits rarely question their own path. Robert Kiyosaki shows that poverty is not an event, it's a system built by repeated choices, often without awareness. And as long as this system is not identified, it continues to function on its own. Recognizing these 4 traps is the first step to getting out of them, because no one changes what they don't perceive. For a long time, many people believed that wealth was just having a lot of money, expensive possessions, or a life of comfortable appearance. But in practice, this doesn't guarantee peace nor security. There are people who seem rich on the outside, but live trapped in bills, debts, and fear of losing everything. True wealth is freedom. It's waking up without the constant pressure that something could go wrong at any moment. It's knowing that if a problem arises, there is preparation. It's not excessive luxury, it's tranquility. Robert Kiyosaki teaches that being rich is not depending on the next payment, on favors, or on third parties to survive. It's having control over your own time and your own decisions. It's being able to say no when something doesn't make sense without desperation. True wealth allows helping family without going into debt, making choices calmly, and thinking about the future without fear. It's not built all at once, but is born from simple habits, repeated with discipline. When someone understands this, the focus changes. They stop seeking just more money and start seeking more financial awareness. Because in the end, wealth is not what you show. It's what gives you peace when no one is watching. Many people give up early because they believe financial change needs to be quick and visible. When they don't see immediate results, they conclude it's not worth it. But money works differently. It rewards those who respect time and maintain consistency even when no one is watching. Most financial mistakes happen due to impatience. The person wants comfort now and pays the price later. Those who build wealth do the opposite. They accept small sacrifices in the present to have tranquility in the future. Robert Kiyosaki always reinforces that wealth is not built in big leaps, but in firm steps. Saving a little every month, avoiding unnecessary debts, learning continuously, making better decisions repeatedly. All of this seems insignificant in the short term, but becomes powerful over the years. Time is the greatest ally of those who act right, and the greatest enemy of those who ignore their own money. While some age working to pay bills, others age with choices that work for them. In the end, it's not those who start with more money who win, but those who remain on the right path for longer. And this is a detail that almost no one teaches, but that makes all the difference between living in struggle and living with freedom. For years, many people live with a single hope. When I earn more, everything will get better. This thought seems logical, but in practice it deceives, because bigger money in the hands of old habits only amplifies the same problems. When income increases without a change in mindset, the pattern is predictable. Expenses rise, the standard of living expands, new installments appear, and the relief is short-lived. What was once struggle becomes just a more expensive struggle. Robert Kiyosaki teaches that money doesn't correct behavior, it reveals behavior. Those who had no control with little will hardly have it with much. That's why so many people with high salaries continue anxious, in debt, and trapped to the next payment. True transformation happens when someone learns to manage well what they already have. Those who do this with little will be prepared to do it with much. Those who don't will continue running after, no matter how much they earn. Earning more can help, but never replaces discipline, planning, and financial awareness. Without this, the problem is not the income, it's the pattern. We live in a time when appearing successful has become almost an obligation. New cars, trips, expensive objects, and a life that on the outside seems comfortable. But this appearance often hides a fragile reality, sustained by installments, debts, and constant worry. Appearing rich is consuming. It's showing. It's spending to maintain an image. Being rich is different. It's silent. It's having control. It's not needing to prove anything to anyone. Robert Kiyosaki always highlighted that true wealth is not in what you buy, but in what you can maintain. A person can earn a lot and still live in fear of tomorrow. Another can earn less and sleep peacefully because they know exactly where they stand. Those who appear rich usually depend on the next payment. Those who are rich depend on planning, reserves, and conscious choices. One lives to sustain the present, the other builds the future. Understanding this difference changes priorities. The person stops spending to impress and starts investing to protect themselves. And from that moment on, money stops being a source of anxiety and becomes a tool of freedom. Most people believe that financial problems arise from big mistakes, a bad decision, an unexpected loss, a difficult moment. But in reality, money is usually lost in a much more silent way. It's the small daily decisions that charge the highest price over time. An expense that seems harmless, a short installment plan, a purchase made without planning. Individually, none of this seems serious. But when these habits repeat, they create an invisible cost that accumulates month after month. Robert Kiyosaki teaches that money follows direction. If there is no control, it slowly drains away without the person realizing where it went. And when the impact appears, it's already too late. Those who learn to observe the details begin to control the whole. Small adjustments made with constancy generate great results over the years. It's not about cutting everything, it's about choosing better. In the end, no one becomes poor all at once. They become poor gradually, decision by decision. In the same way, financial stability is also built like this, step by step, with awareness. Many people wait to feel motivated to start taking care of money. They wait for the ideal month, the right moment, the day when they will be more excited. The problem is that motivation is unstable. It appears and disappears. Discipline doesn't. Robert Kiyosaki always reinforces that those who win in the financial game are not the most excited, but the most consistent. It's not those who start with full force, but those who continue even when they don't feel like it. Financial discipline shows itself in small, repeated actions, saving an amount every month, avoiding impulsive purchases, reviewing expenses, learning a little more each day. None of this is exciting, but all of it works. Those who depend on motivation take care of money only when there's spare time or mood. Those who have discipline take care of it even in difficult months, even when the result doesn't yet appear. In the long run, discipline builds something powerful. confidence. The person begins to trust themselves, their own decisions, and their own planning. And this confidence is worth more than any quick gain. In the end, it's not excitement that builds wealth. It's silent constancy. Many people give up before even trying because they believe it's already too late. They look at their age, at past mistakes, and think, if I had started earlier. This thought paralyzes and keeps everything exactly as it is. Robert Kiyosaki teaches that the worst financial mistake is not starting late. It's never starting. Time will pass anyway. The difference is whether, in a few years, the person will be in the same place or in a better position. Those who start today, even with little, gain something valuable: direction. Small, correct decisions made now still have real impact on the future. Adjusting habits, reducing mistakes, and learning continuously creates progress, even if slow at first. It doesn't matter how many mistakes were made before. Money doesn't judge the past. It responds to the actions of the present. Each well-managed month counts. Each conscious choice reduces the weight of old choices. Starting late is not failure. Failure is continuing to repeat the same mistakes, knowing they don't work. The financial turnaround doesn't happen when everything is perfect, but when the person decides to act differently from now on. In the end, money was never the real problem. The problem has always been the way it was treated throughout life. Small choices, repeated habits, and decisions made on autopilot silently build the future, for better or for worse. Poverty is not lack of effort, it's lack of direction. And wealth is not luck, inheritance, or privilege. It's the consequence of awareness, discipline, and time. Robert Kiyosaki reminds us that anyone can change their own path the moment they decide to learn, take responsibility, and act differently. It's not about getting rich quick. It's about stopping making mistakes that keep you trapped. If you've made it this far, it's because something made sense. And when something makes sense, ignoring it costs dearly. Start small. Adjust a habit. Observe where the money is going. Learn a little more every day. Because financial freedom doesn't begin when you earn more. It begins when you think differently. And that decision can be made today.